Achieving financial independence is a dream for many. With strategic investments, this dream can become a reality. Below, we explore 10 key assets that can generate substantial wealth and passive income, enabling individuals to retire early and live a life where work becomes optional. This video also highlights inspiring examples of successful entrepreneurs who have built wealth through these assets, showcasing how you can apply their strategies in your journey. Each section delves into the specifics of these assets, providing detailed insights and real-life examples. Number 1. Real estate investments. Real estate is a cornerstone of wealth building. Due to its ability to generate rental income, appreciate over time, and provide tax benefits. Here's how real estate can make you rich. Rental properties. By purchasing residential or commercial properties and renting them out, investors receive a steady stream of rental income. The rent can cover mortgage payments, property maintenance, and still leave a profit. Real estate often appreciates over time, meaning the value of the property increases. Investors can sell properties at a higher price than they purchased, realizing significant capital gains. Investors can take advantage of various tax deductions, such as mortgage interest, property taxes, and depreciation, which reduce taxable income. Robert Kiyosaki, author of Rich Dad, Poor Dad, started his wealth journey with small rental properties. He leveraged these initial investments to buy larger apartment buildings and commercial properties, ultimately creating a vast real estate empire. His rental income and property appreciation have provided him with financial independence. Number 2. Dividend-paying stocks. Dividend-paying stocks are shares of companies that regularly distribute a portion of their earnings to shareholders. These dividends can provide a reliable income stream, in addition to potential stock price appreciation. Dividends are typically paid quarterly, providing investors with a steady income. This can be particularly valuable during retirement or periods of market volatility. Many investors reinvest dividends to purchase more shares, benefiting from compound growth over time. Companies that pay dividends are often well-established with a history of stable earnings, making them less risky. Warren Buffett, one of the world's most successful investors, prefers companies that pay dividends. Through his company, Berkshire Hathaway, he owns shares in dividend-paying giants like Coca-Cola and Apple. The dividends from these investments provide a significant income stream, contributing to his wealth. Number 3. Index funds and ETFs. Index funds and exchange-traded funds, ETFs, are investment vehicles that track a specific market index. These funds offer diversification, low fees, and a hands-off investment approach. By investing in an index fund or ETF, investors gain exposure to a wide range of companies, reducing the risk associated with individual stocks. Index funds and ETFs typically have lower management fees compared to actively managed funds, allowing investors to keep more of their returns. Historically, broad market indexes have provided solid long-term returns, making these funds ideal for building wealth over time. Jack Bogle, the founder of Vanguard Group, championed the concept of index fund investing. His philosophy of low-cost, diversified investing has helped millions of people build wealth. Bogle himself amassed significant wealth through his investments in Vanguard's index funds. Number 4. Peer-to-peer lending. Peer-to-peer lending platforms connect borrowers directly with investors, allowing individuals to lend money and earn interest. This form of lending can offer higher returns than traditional savings accounts or bonds. P2P lending can provide attractive interest rates, often higher than those offered by banks. Investors can spread their money across multiple loans, reducing the risk of default by any single borrower. P2P platforms are easily accessible online, making it simple for anyone to start lending and earning interest. Renaud Laplanche, co-founded Lending Club, a leading P2P lending platform. Lending Club allows investors to fund personal loans and earn interest on their investments. The platform's success has enabled many investors to achieve high returns, contributing to their financial independence. Number 5. Royalties from intellectual property. Intellectual property (IP), such as patents, trademarks, and copyrights, can generate ongoing income through licensing or royalties. Creators of valuable IP can enjoy passive income for years. Royalties provide a continuous income stream without the need for ongoing work, making them a powerful asset for wealth building. Intellectual property can continue to generate income long after the initial creation, often for decades. IP rights can diversify an investment portfolio, adding a different type of asset that isn't correlated with traditional investments like stocks and bonds. J.K. Rowling, the author of the Harry Potter series, earns substantial royalties from book sales, movie adaptations, and merchandise. Her intellectual property continues to generate income, making her one of the wealthiest authors in the world. Number 6. Rental income from vacation properties. Investing in vacation properties in popular tourist destinations can be highly lucrative. These properties can be rented out to tourists, providing significant rental income. Vacation properties can command higher rental rates, especially during peak tourist seasons. Like other real estate investments, vacation properties can appreciate in value over time, adding to overall wealth. Owners can also enjoy personal use of the property during off-peak times, combining investment with leisure. Richard Branson, the founder of Virgin Group, owns Necker Island, a luxury resort in the British Virgin Islands. By renting out the island to high-profile guests, Branson generates significant income, contributing to his overall wealth. Number 7. Digital assets and online businesses. The rise of the digital economy has opened up numerous opportunities for wealth creation through digital assets. Owning websites, blogs, or e-commerce stores can generate passive income through various monetization methods. Websites and blogs can earn money through display ads, sponsored content, and affiliate marketing. Online stores can sell products directly to consumers, providing a steady income stream. Digital businesses can scale rapidly, reaching a global audience with minimal additional costs. Pat Flynn, an entrepreneur and online business expert, built a successful blog and podcasting business. Through affiliate marketing, advertising, and selling digital products, Flynn generates substantial passive income, allowing him to focus on other ventures. Number 8. Commodities and precious metals. Investing in commodities like gold, silver, or oil can provide a hedge against inflation and economic uncertainty. These assets often retain their value over time and can offer significant returns during market downturns. Commodities often increase in value during inflationary periods, protecting investors' purchasing power. Commodities can diversify an investment portfolio, reducing overall risk. Precious metals, in particular, are considered safe haven assets, providing stability during market volatility. Jim Rogers, a renowned investor and co-founder of the Quantum Fund, has a diversified portfolio that includes commodities. His investments in gold, silver, and other commodities have helped him preserve wealth and achieve financial independence. Number 9. High-yield saving accounts and bonds. While not as glamorous as other investments, high-yield savings accounts and bonds offer a safe and steady income stream. These assets are ideal for conservative investors seeking low-risk options. High-yield savings accounts are typically insured by the government, providing a safe place to store money. Bonds offer regular interest payments, providing a reliable income stream. These investments focus on preserving capital, making them suitable for risk-averse investors. Suze Orman, a personal finance expert, advocates for the importance of having a diversified investment portfolio that includes bonds. Her conservative approach has helped many individuals achieve financial security and grow their wealth over time. Number 10. Owning a franchise. Franchising offers a proven business model with established brand recognition. Franchise owners can benefit from a turnkey operation and ongoing support from the franchisor. Franchises come with brand recognition and a loyal customer base, reducing the risks associated with starting a new business. Franchisors provide training, marketing support, and operational guidance to franchisees. Successful franchise owners can expand by opening multiple locations, increasing their income potential. Ray Kroc, the mastermind behind McDonald's expansion, turned a small restaurant into a global franchise empire. By owning multiple McDonald's franchises, Kroc amassed substantial wealth and created a legacy that continues to thrive. Achieving financial independence and the freedom to retire early is a goal many aspire to. By investing in the right assets, individuals can build wealth, generate passive income, and create a secure financial future. Above mentioned 10 powerful assets that can make this dream a reality. As these examples show, with strategic investments and a long-term perspective, financial freedom is within reach for those willing to take the plunge. Thanks for watching. If you're into wealth creation and the luxury lifestyle, subscribe to the Luxe Masterplan for tips and inspiration. See you in the next video.